Hello, this is Dave, and welcome to Equities Story. I'm with Mr. Wolfie, and Wolf, I'm actually apologize if I'm sitting a little bit funny in the desk, but I've got to put my foot up because I can't cook because I accidentally dropped something on my foot, so I've got to have it raised. So I'm not looking. I don't wish to look as relaxed as I'm looking.
Is this like a one of those situations where you don't want to go to war, you shoot yourself in the foot, so you don't want to cook, you spill some stuff on your foot? Is that the same thing?
Wolf, I'm such a bad shot. I don't think I'd even be able to shoot my foot, to be honest with you. But yes,
it smells a bit, I have to say.
all right, this is just general share advice, not personal. And advice is don't cook when you've been drinking too much.
Do you actually say that?
What?
Pretty much knows.
Well, that's good advice. It's general. It's not share advice. It's general advice. But
it's like saying, please don't drive when you're drinking."
Yeah, same thing. Yeah, it's definitely not.
All right, genius.
All right, Wolf. Let's start from the bottom.
Yeah.
Appin gets worse and worse, doesn't it?
Oh yeah. Look, I think, look, if I was still thinking that this might recover, what happened yesterday with the CFO resigning suddenly after only being like a month in it, I think, that's just, I think that surely that's a run for the hills moment, isn't it? Yeah. I mean, it's just so bad. Maybe in the background, we don't even know the full extent of this. I just wouldn't be in this at all.
Yeah, and again, there's a warning here. You see this as it trend, and remember it jumped above trend, yeah? And we said, don't buy it. It needs to swing, right?
Yep.
So when you get stocks, really weak companies that have had a really, really hard time, don't just buy them if they jump over trend. Let them prove themselves, right? Let them swing. Let them give you another moment, and that's what we're saying. And look, it was just it was a false flag, and bang, and bang, down it goes.
Yes.
Now, Wolfie, REC. A few people ask us about this little lithium thing because it sort of poked its head up. I think it's got a little bit of land today, or some lithium. What's it saying? Some lithium deposits coming their way.
I think they just concluded the transaction that they picked up some stuff in Canada. I mean, look, I had a look at this. There's a lot of companies at the moment picking up ground in Canada, right? With Recharge. So it's nothing incredible. I mean, obviously, Canada seems to be well endowed with lithium, right? There's no doubt. So you might get a little bit of excitement when picking up some ground, but early days. I mean, my God, I mean, can you imagine your company quadrupling just from picking some ground? It's just ridiculous. It's FOMO at its finest.
But
trade it like you normally trade your stuff, but just be extremely careful. You need to know what you're doing with these sort of things because you might get caught with your pants down.
Yeah, and trade it off the daily, not the weekly. This one. Now, SRG. Wolfie, last week it bounced above trend. It's just holding above trend. It's had a few announcements far away.
Yeah, I'm digging this, little company. It's not expensive. It's got a good dividend yield. It's just adding those contracts up. He had a little upgrade recently. I think the only misstep they did, I think, was one of the directors was selling. We saw that couple of red candles about 4 or 5 weeks ago. But it's working itself back up again. And if it just holds that line for another week or two and starts going up, I'm a buyer. I like it.
Yeah. All right. XRF looks like it's broken support. Looks like it's going to come back and flirt with that. Maybe a cheeky bid at 102, 103. Wolf.
Yeah, I mean, look, it hasn't done this for a long time, right? So remember, you always tell me it's done something that hasn't done for a while. So I'm a little bit just sit back and wait to see what happens now. Wait till it maybe goes to that $1 in bounces before I buy it. Other than that, it's still a good story. Of course, nothing's changed. I think a new product today they've announced for the coal miners out there. At the end of the day, we're obviously going with the CTM on this, and we're fundamentals. Fundamentals are still sound. So the second part, we need to make sure that it does hold that blue line. So we just got to be patient. I wouldn't be buying it. I'd just be waiting.
Wolfie, I think 2 more weeks, right? With the exhaustive pattern, 2 more weeks, then we get a little V-shaped turn.
Let's hope maybe they come up with a quarterly, right? And we can see what they actually do.
Well, it's funny you should say that. It might be perfect timing.
Yeah, exactly. And to be honest, I'd rather just wait for the quarterly. I'd rather buy it higher than lower. But in this case,
All right. Now, corporate travel. That's a broken trend. Now, you saw a lot of these travel stocks, Wolfie, coming off last week.
yeah,
And corporate travel was no different.
yeah,
And yeah, it doesn't look very good, does it?
yeah. On one article in AFI, it's unbelievable how all these travel companies got absolutely hammered on the one article in an AFR, right? Saying that we're seeing a lot more, I suppose, less activity, more vacancies, and that was like I think an owner of Byron Bay. I remember he say of Byron Bay accommodation, and I'm thinking to myself, what is Byron Bay the bill and end all of all accommodation or international travel?
Well, I think Byron Bay did well over COVID, right? But now people can travel.
Exactly, that's what I'm saying. I don't know.
I don't know.
Because I think that they can't point it to what is happening here, whether people are holding back because of money terms, or are they holding back because they've got other options maybe to go to travel. Look, it's interesting dynamic. It has certainly affected the travel sector. It has thrown a lot of those travel stocks below trend line, so we had to be out. But yeah.
I would argue a lot of Byron Bay is quite expensive, right? So I think a lot of those people that had that sort of Byron Bay going up and renting sort of expensive places on the beach, they're most probably back to France, aren't they?
Possibly. And I'm looking because we've got a few places here that are rental for holidays.
Yeah.
They already no vacancies on ours, right? Even in the middle of winter. So I don't know. I mean, Byron Bay could be one of those. Yeah. So what, Byron Bay? We'll see. I'm fencing. I have to say, I want to see a bit more facts and figures. I'm hearing what they're saying, but I'm still seeing Qantas updating, saying, with full capacity, everyone's traveling. So it could be just no one wants to go to Byron Bay.
All right, you've got VNT. Now that chart looks good. It looks like it's going on with it. Wolf, maybe retest that sort of $3. What's going on here?
Big contract win with the Department of Defense. They've actually, if you look at the figures, right? So I'm going to give you the lowdown here. This has to make, surely, you're looking for dividends, right? So you've got a P, I think I saw today on FN Arena. So they've got an update today on FN Arena, right? So I'm going to just go down to event here, and they've got a price target, and I'll tell you what they're looking at. So according to them, whoops, let me go back to the end. Okay. So this is Macquarie, right? Pretty respected in Australia. 310 price target, which is not that far away, but still above where we are at the moment. They've got a trading on 12.5 times with a yield of about 5.8, right? That's attractive. Great looking chart. What else can you say? I mean, winning contracts, one of the biggest companies in Australia. I think this makes sense.
All right. I thought we didn't get out of bed for this 7.
No, I think these days we need to start a little bit more, because we need to have look at some stuff that actually trending at the same time.
But I suppose arguably, Wolf, what you're saying, there's growth with this.
Yeah, exactly.
So, yeah,
exactly.
I mean,
you wanna find that maybe a trending as well. So I will get out of bed for less than 7 if it's trending and if it's growing.
All right. Well, it's definitely obviously growing, isn't it? Well, you know what? Let's put it as a long-term buy, dividend and growth.
Yeah, I think dividend first, growth second. So fully grossed up. Let's Dave. Okay, so it is actually over 7 fully grossed up. It's 7.5% fully grossed up.
Okay, yeah, which is respectful, right?
Well, we're getting out of bed for that then.
Okay, so we're going to buy it under that 2.95, right?
Yeah.
It's a 3-year growth with divs.
Oh, no, a 3-year dividend. Let's not call it growth, because it could be cyclical. If we have a a pretty heavy economic downturn, it could maybe go sideways. So let's just call it dividends with a bit of growth. Let's not confuse everyone that it is just going to be growth with a little bit of dividends. I think it's the other way around, although I like how it's going at the moment, right?
Okay. Right, let's write this up. Get it right. It's an interesting one, Wolf, isn't it? Because we've seen a lot of these sort of stories do reasonably well.
Yeah, absolutely. So look, it's like I said, it's big, it's diversified. So potentially they'll have better, if there is going to be a downturn, they're might be navigate through it better, right? They might have more levers to pull, potentially better margins as well than some of the smaller type players. So you've got not a bad company that's doing okay.
Yeah, and unfortunately, it might. I'm just having a look at this. It might not break. It might not break through immediately, but we'll put it on anyway. So it's, I think long term div play, paying a good dividend, it's growing. It's sort of a story that we're interested in.
Yeah, absolutely. I mean, that's exactly right. It ticks a lot of boxes, doesn't it?
Yeah. All right. Next question, CKF, Collins Foods.
Mm-hmm.
So this is the chicken fast food takeaway, KFC. How's it cooking?
Yeah, look, I to be honest, I've never been a fan of the fast food companies because I don't eat it myself. I can understand rollout stories with with the Domino's and the CKFs where they just open up new stores, right? And people come and buy it, even though their margins might be small. It's all about numbers, right? So the more stores you open, you're going to just add that little bit more, which adds to the bottom line, right? If you're doing it successfully. So I understand, but overall, you look at this. I mean, the chart is not brilliant. Yes, it's probably delivered a result today better than people expected. But you know what? Now that we've been looking this probably for the last 12 months, maybe even a little bit more, 18 months, it's just a tick enough boxes for me, Dave. Unfortunately, it's just been too volatile and just too unpredictable.
Yeah, definitely. And it's the same message here with Appen. You just need to see this do a lot more. It needs to get above the trend line. It needs to start to trend a little bit, and certainly just definitely.
And the other thing is you got to always look underneath the bonnet, as in what are the businesses they've actually owned. Remember they used to have Sizzler, pretty poor. Taco Bell,
Yeah.
KFC is probably the jewel in the crown for them. But again, long in the tooth. I don't know. I mean, if there was a fresh, some interesting, super duper, everyone wants to have a piece of it type fast food, then I probably treat it in a bit more respect. But this is just old school type stuff. Nothing really exciting.
All right. MPA Wolf. So mad pause.
Yeah. Look, the reason I'm looking at this, and you look at the chart and going, what are we doing here? I'm looking from a point of view of just following a story that's actually not a bad space, that is the servicing the pet industry, which is the food and so on, and they are growing. They are delivering on what they're saying. So I've got this on my watch list, right on the bottom, but I've got it on my watch list to see how they go, because I know that this industry is just unbelievable good when it comes to us to looking after our pets. So for me, there's always going to be I suppose a special place for companies like this, but it's not going to be easy. So while I'm not interested at the moment, I am interested in the announcement to see how their progress is going. So again, a decent announcement. However, still unprofitable. You probably still got at least another 12 months. So bottom of the list still. Let's forget about it. Let's come back in 12 months and see what happens.
All right. Now, another story which you're quite liking the look of, and certainly the chart is starting to look a little bit tasty, is SHL. Maybe needs to do a little bit more, Wolf, for us to put it on as a trade, right? But you know what? It's had that beautiful run up because it had some good news around here. It's come back. It's held trend. It's starting to cup a little bit.
Yeah.
This could potentially be an interesting little buy, Wolf.
They respect to SHL, right? And look, let's respect in the chart as well. I mean, well done to them. I think they're past now that COVID stuff, which we've seen that's huge volatility up and then huge volatility down, and that huge reversal that we've seen maybe about 3 months ago, right? Where, the market's obviously got it wrong. But now it seems like now we've given enough time for it to form that sort of support, that, that chart motion of maybe a cup forming here. And when you look at the company trading on 16 times, 4.2% fully gross dividend yield, I got to give a respect. I'm actually liking this because I know at the moment I'm looking at the markets themselves, AXJO, right, and ASX, whatever. It's not the small companies that are trending at the moment. It's more to the bigger companies like your SHL. So I'm more attracted right now to SHL than I have been for some time. So possibly could be a nibble time.
All right. Okay. You've got a nibble on this one.
Yep.
Okay. Interesting, Wolf. We've gone through some stories. We've got a dividend play. We've got a nibble on SHL.
Yep.
I'll put those up.
Yep.
Having a look at last week, I thought Coles had a pretty decent buy signal. It's certainly outperforming the market, as is Woolworths, and maybe the market looking for a little bit of safety at the moment.
Yep.
TLX hasn't gone through, but I still think it's opportunity knocks there. So, and there's some good stories on Einstein's. I think we had a look at this. BXB, I think could nibble up a little bit higher. DBI, good little dividend play. I think looks fairly good. MMS, which is okay, it's a hot stock back here and looks like it's still going with it, just extraordinary. AKG hasn't traded much, just lightly traded, but good little chart. IAG, obviously very, very good, and I think great little stop loss if you want to trade this now, just below that 545. AUB, Ozbrokers, likewise looking very, very good. And NXT, Wolf, I think these were some stories on Einstein's well worth maybe having a look at. And interesting, there's two on Einstein's, another two that really went on with it in a very difficult market, that CTT. And you're talking about people have got the money, just seem to always have the money, don't they?
It's always the case. Is the rich people, or the people with, like you said, the ones that can have actually good cash flows, they are least affected by the bottom type stuff that happens in economy, which is recessions or interest rate rises and so on. Because they've got so much disposable income, it doesn't really affect them that much. So the expensive clothes, the prestige and everything else, the people that can actually afford to pay for this stuff, they'll just keep paying. And maybe there's a lesson for all of us here. These things maybe are recession proof in a way.
All right. On that note, Wolfie, I'd like to thank you very, very, very much. Some two good ideas there. And tonight at 7 o'clock live to answer all the questions.
Yes.
All right. Thanks, Wolfie. See you, mate.
Cheers, guys.